Hi, everyone. This is Jason Barack of Wall Street for Main Street and independent financial journalist Eric Dubin. Welcome back to another Welcome to Dystopia podcast. This is episode number 8. Eric, there's so much going on right now. One of the main things that I think most people in the markets are paying attention to is, will the Federal Reserve raise interest rates? So what's your thoughts on this?
It goes back to what we were talking about in our interview, I think it was in January, where looking forward, it was pretty clear that the quest to normalize interest rates and keep credibility in the eyes of market participants was going to be something the Federal Reserve is going to put a premium on and attempt to do an interest rate normalization cycle. But at this stage, there's so much volatility in the markets, there's so much risk factors when it comes to high valuations and Western equity markets and the distortions that have been put in with all the manipulation, that they just don't really have the ability to raise interest rates. And we have this albatross hanging over the whole system's neck when it comes to the interest rate derivative positions that are $600+ trillion worth of derivatives. And the mess that has been created in financial markets is such that the Federal Reserve has really no ability to do anything without breaking something. No matter what they do, they're going to break something. There's a possibility they might do a 25 basis point hike tomorrow when they announce, and we're recording Wednesday, 16th of September. Maybe they'll do 10 basis points. Who knows? I think it's probably only a 10-15% chance that they do any kind of rate hike just for token's sake to preserve their credibility. And if they do raise interest rates, it's going to be a one-and-done kind of scenario in my best estimation. But the lion's share probability is that they're going to just do nothing.
All the major markets, whether that's the stock market, commodities, pretty much everything is in a downtrend already. So we're starting to see that volatility come back, like we said in previous Welcome to Dystopia episodes, and also the pain of being on the long side, where, people who check their account every day, their shares are going down. Some of them are going to panic sell. They're going to cut their losses if they didn't have stops in place, or they don't have cash on the sidelines to buy more. Some people aren't going to be able to take that pain. It's not in human nature to be a patient, great long-term investor. Value investing is difficult. A lot of these people are going to panic sell. They're going to start to sell. And for some of these companies, it's justified. But, the bond market, we haven't had that enormous volatility, especially in the United States yet. But that's because that's where the majority of the manipulation is. Look at all the dumping that China did of the Treasuries, and I don't think it moved things really one iota, right? This massive record amount of dumping.
They did probably about $100 billion worth of sales of US Treasuries in a span of 2 weeks. It's a giant amount of money.
Welcome to Dystopia. Welcome to Dystopia. Emerging markets are feeling enormous amounts of pain right now. I looked at some of the main Brazilian companies. The emerging market currencies are in dire straits. Some of them are down, more than 25% in just the last 12 months. They've been cut drastically, and a lot of these larger companies, Eric, they own enormous amounts of U.S. dollar denominated debt. I was looking at Petrobras' balance sheet. It's a disaster. They have the oil prices down a lot, but on top of that, they used an enormous amount of debt to drill. They issued billions of dollars in 100-year bonds. They have $270 billion with a B in debt and only $40 billion of equity on their balance sheet. That is a 7-to-1 debt-to-equity ratio. For those of you out there who don't know a lot about looking at a balance sheet, drastically over-leveraged balance sheet, that's about a hedge fund. They're going to need to sell more shares. They're going to need to sell assets. They're going to need to sell what they can to improve that debt-to-equity ratio because they're going to struggle to make those debt payments, especially the ones that are due in the near term. And I just looked at Vale, which is the base metals producer for iron ore and copper and nickel and things like that. And they're not quite as bad as Petrobras, but they're still pretty bad. Debt-to-equity ratio is well above 1. Their debt-to-cash flow ratio is not pretty because base metal prices have dropped. They're planning on cutting down mines that are enormously uneconomic. So this is a situation, Eric, where it's not just Brazil. I don't want to pick out Brazil too much, but a lot of these emerging market countries, I guess their plan was to leverage to the hilt to bring on, new capacity for oil and base metals and sell it to China, and they thought China would continue to boom. But now that the commodity prices are down, they have all this debt, and the value of their shares, the value of their commodities has been more than cut in half in just the last year or two.
Yeah, and you do have this kind of like flywheel cycle going on as well. The Chinese economy is turning down, and they've been having outflow capital from their stock market, and that is in turn pushing up the value of the dollar. And the bonds that Brazil, whether it be their companies or the nation state itself or other countries all around the world in the developing world, have all of this debt denominated in U.S. dollar terms. The dollar's been going up. The Bank of Japan and the ECB have been undergoing QE while the Fed has, at least in terms of its public relations and outward public policy statements, they're no longer doing QE officially. But in the background, rolling over the bonds and the interest rates that come from its portfolio, and there's probably a lot of derivative action behind the scenes and under the carpet, too, that is kind of like a clandestine QE program. So all these things have been pushing the dollar up vis-a-vis all the currencies around the world. And when Brazil or Petrobras has dollar-denominated debt, the burden of carrying that debt has been going up as a percentage of the interest payments. So it's been putting huge pressure on the system. And all of this gets right back to the Fed, because if the Fed is to raise interest rates tomorrow, it will, on an incremental basis, put more upward pressure on the dollar, and the cycle begins anew. It's kind of like a feedback loop. This is one of the other reasons why the Fed is probably going to just stand pat and do nothing, because whatever they do tomorrow when it comes to raising rates will have feedback loop effects throughout the whole financial markets.
It's a vicious cycle, and I got an email from someone, thank you, our listener, I think from Sweden, thank you for your email yesterday. It was about feedback loops. So it's a positive feedback loop, even though it's causing pain, because the cycle isn't broken.
Right.
So the cycle is still creating a loop, so it's positive. Whether it's negative pain or in a positive sense to someone, it's still a positive feedback loop. So thank you for correcting that. But I mean, the emerging markets, they've turned into the subprime, Eric, because we've seen, their hedges, their dollar-denominated debt. They have enormous amounts of financial problems here. They did a lot of central planning. They expected China to stay strong and growing. And the problem with taking on debt with mining companies and commodity companies is the debt is fixed unless you're using variable, and then you're in even more trouble if the interest rates spike and the value of your currency drops against dollar-denominated debt. But the value of the debt stays the same, then your asset prices drop, your shares, your equity is dropping, and your cash flow is dropping. So it's basically a quadruple whammy there, in the sense if interest rates spike, your currency is getting weak, and then, all your asset side, your cash flow and your equity, and they're all falling like a rock. It's just a vicious cycle for some of these companies. I mean, looking at Vale and Petrobras, they're going to have to sell a lot more shares. They're going to have to sell assets. Petrobras is looking at potential bankruptcy, depending upon when their interest rate payments are first due, if they can make those. But I don't know if they're going to be able to refinance anytime soon. And Vale is also in similar trouble. They have a lot of assets, but they're going to have to sell these things maybe to China for pennies just to survive and buy themselves some time.
They'll be able to get financing. It'll just be at a big discount, and that certainly is going to hose current shareholders. And just to put the perspective in terms of how much debt we're talking about worldwide, I mean, the estimates vary depending on what you count, but it's upwards of $6 trillion to $10 trillion worth of dollar-denominated debt in the developing world. It's a tinderbox, and if we do see the dollar rise quite a bit more from where it already has risen, that's going to create even more trouble in financial markets. So, again, all things considered, it points to the Fed most likely sitting on its hands tomorrow, but we'll see.
Yeah, I mean, even if they do raise interest rates in the next couple quarters, they're going to be token amounts, I think, and they may break things faster, like you said earlier before the recording. So we could have leveraged assets that start to fall. There's collateral problems, and they have to sell things that they don't want to sell just to survive. So, I mean, I think in the sense that the Fed is trapped, Japan is trapped, they cannot normalize interest rates. They have very big math problem. Interest payments on the debt, they can barely make the interest payments now. If interest rates normalize, they would be in trouble. And the principal for all this debt, there's no way they're going to pay off any of it. There's basically no one, Eric, on planet Earth, the Chinese, Japanese, United States, Europe, you pretty much name it, that can pay off the principal on their debt right now, because I think David Stockman said this in his interview on USA Watchdog. He said the global economy a decade or so ago was about $50 trillion total debt. Yeah. And, in just the last 12 years, it's gone to over $200 trillion in total debt. It's massively increased by a massive amount of moves. So, I mean, that's way more than cash flow and assets and things like that can withstand those debt levels. And that brings us to our next story, which is kind of tying in with the interest rate increases. And that's the G20's promise now, and I'll put promise in quotes, to avoid currency wars. So for our listeners who are not familiar, on September 7th or around thereabouts, there was a meeting with the G20, and they pledged to refrain from further currency wars. Eric, what do you think about that?
Well, I think that we can take them at their face value. I mean, come on. Yeah, we got a currency war going on in full blast, and they make statements like this. It's rather funny.
Yeah, I mean, these politicians and central bankers, we have to look at their track record. So I'm a big person that talk is cheap with me. So you can tell me you're going to do something, and then you can repeat it all the time. But if you don't actually take any steps to doing it, and I don't see any, action or proof, I'm not going to believe anything you say. So I'm kind of in that camp with the politicians and central bankers. No, not kind of in that camp. I am 100% in that camp. I don't believe anything these guys say. These guys have to show me that they're actually going to do the right thing, and they haven't shown that at all for the most part.
This actually gets back to our first conversation about the Fed, because what started the latest chapter in these ongoing currency wars was the Chinese devaluation. And they devalued primarily because of the strength against the dollar. They're exporting market-oriented economy still, even though they're trying to do a greater emphasis on social development for their own consumer market. But, the bottom line is that they were getting crushed when it comes to their exports, and they needed to launch that volley. And when the Fed is looking, or at least doing the jawboning to try to make the case that they're going to raise interest rates at some point in the future, that helps keep a lid on the dollar and gives a bid to the dollar. So once again, you have that factoring into creating the impetus for an ongoing currency war. And the Asian markets are going to start shooting at each other. Korea, Thailand, etc.
And that's what happened during the Asian tiger crisis, because they were in competitive devaluations then, and they took on too much bank debt, and the debt started to go bad back then, and then there was smaller amounts of currency swaps then. In terms of what happened to China, there's people, one of our listeners was commenting that, China, it wasn't a devaluation with that. How would you respond to that then, what our listener said, what China did wasn't really a devaluation then?
I'm not really sure I understand the question. Maybe the listener is referring to the fact that they have a managed peg, because it didn't turn into an absolute float vis-a-vis the dollar. They just shifted the peg.
I think that's what he's trying to say. The counterpoint to what the guy was trying to say, that it wasn't really a devaluation, would be then why was China then actively trying to sell the treasuries to stabilize their currency if it wasn't a devaluation?
Okay, yeah. That probably confused a whole heck of a lot of people, because initially China just devalued, and if you stopped right there and looked at what their policies were, you would have a very clear indication of where they were going. But then when the movement in the currency got away from them and it went faster than what they were expected, they actually used some of their proceeds from the sale of the US Treasury hoard to put the yuan back up. They were buying it, so they were trying to correct the degree to which it had fallen. Maybe that is what the listener was speaking about, because that's what happened in the first week. China has a managed peg. It's not a free float to the U.S. dollar, and it's allowed to float within a band around the center of this peg. And what they did was they devalued by moving the peg.
Exactly, and all Keynesians are mercantilists, and mercantilism is about exporting and devaluing the currency. And most of the Chinese PhD economists, they either learned in London, or they learned in U.S. universities, or they learned on Wall Street. So they learned at all the major Keynesian universities, the top PhD economic schools. Most of the central bankers all around the globe are from pretty much the same dozen or 24 schools, either in England or in the United States.
Yeah.
I want to move on to our next topic, and that's the Comex. We have articles out talking about the leverage ratios for the paper futures contracts in the Comex, and we're over 200 to 1 now. What's your thoughts on this? Is this surprising to you?
Not really. We've been higher before, and it ebbs and flows. And when I say higher before, I don't mean higher than the 200 to 1 ratio in the Comex, but just it's shifted around a lot. For many years, it was around 50, and then it got over to 100, and then back and forth. And what it indicates is that the overall paper trading in terms of dollar value or in terms of contracts that are carried in the month relative to how much gold is in the eligible and registered categories in Comex and the system overall was such that the paper trading is beginning to drown out the physical holdings that are eligible for delivery in the Comex system. And some people can make an argument and say that, well, the contracts each month are either rolled over or closed, and very few people take physical delivery in the Comex, so these ratios don't mean anything. I think to some extent, to a very large extent, actually, that kind of misses the point. The Comex is no longer a physical trading center, but then again, that's actually the point. It is no longer a physical trading center, and because of that, the market signal value of the price discovery mechanism of the market in and of itself is degrading over time. People take it less seriously. I mean, if a real investor, a sovereign wealth fund, a large buyer, or an industrial buyer that needs to buy silver or even gold for applications doesn't have the leeway and freedom to participate in a market that can't necessarily back up delivery in size for big orders. And that's increasingly where the Comex is going in its direction, vis-a-vis the London trade. And even in London, on the LBMA, you have this persistent examples of backwardation that speak to the fact that the physical market is very, very tight, and that the market itself is beginning to come under strain in terms of a viable, deliverable futures exchange. And people need to understand that if you don't have an ability to actually have deliveries off of a futures exchange, then to some extent it's not a real functioning market, and people won't take it as seriously. And that's the underlying confidence that erodes in the Comex. It's happening now, and people can ignore that whole phenomenon and say that people cash out or they just roll their contracts, and there's no point in trying to get some signal value out of a high leverage ratio. But I think that's fundamentally incorrect.
Yeah, and we saw the news story come out about the expert who was on TV saying how there's not much physical gold left in London. Most of the bars have been cleaned out.
That was,
so the question is,
just to fill people in, that was Peter Hambro, who has been running a gold company in Russia for over a decade.
Yeah, very good. So the question then is, when are the LBMA and the Comex, which are basically casinos of paper traders between investment banks and hedge funds, and not much real commercial companies on there anymore, and these guys have inside information and they wipe out the retail traders all the time because they can see their margin debt and stuff like that, and they can easily blow out stops because they're backed by so much capital. When is the paper tail not gonna wag the dog anymore?
Yeah, that's a really tough question, and everyone in the gold community has asked that question many, many times. And I think the most likely way things are going to evolve in the future is that as we get the Shanghai Gold Exchange doing their own fix and their own price mechanisms being taken more seriously across the world, particularly in terms of people who are buying for industrial uses, or investors in sovereign wealth funds, like I mentioned in an example before, where they definitely want to get delivery. More and more of the gold trade is going to be centered in the Shanghai market and Asia overall. And you even have the LBMA and the Comex looking to set up contracts that are going to be keying off of the Shanghai exchange because they know that that's where the future is going to be. No pun intended. Yep. So, as that market develops and as the volumes increase and the degree to which physical is being transacted through the exchange and delivered to end customers, the market's just going to take on more of a center of gravity in the precious metals world. And that's when the LBMA and the Comex are just kind of fade away in terms of their relevance. It probably won't be this kind of force majeure kind of scenario where the Comex could, get stuck with too many people or too many institutions or both taking delivery and putting pressure on the system. I mean, that could happen. Who knows? But I do know for a certainty that over time, for the next 2 years or so, the Comex is probably going to lose. Well, it might take a little longer than 2 years, but anyway, whatever duration of time is required, the simple economics of the trade flows of where gold and silver are trading is going to change the way in which price discovery is factored in a worldwide market system. At some point, China is going to be the price setter of the precious metals market, and Comex and LBMA are going to just shrivel.
Yeah, and Platts Metals, Eric, I don't know if you saw this a couple months ago. They ran a story on their website. I think they're a big information dealer for both oil and precious metals and other base metals. They were saying how the Shanghai Gold Exchange, the goal was to be able to set their own price fix by the end of 2015. So I don't know if that's actually going to happen, but we may see that, in 2016, sometime in 2016 then.
Oh, they'll probably get it off the ground in 2015. That's not really a hard thing to do. But there's some people within the precious metals community that think that, as soon as that goes live, it's going to change everything. Same kind of stories are going on. I remember the very first day it was announced that the London PM fix was going to go by the wayside and be completely replaced, and everyone in the precious metals community was jumping up and down thinking, yes, this is the end of manipulation. And then, we did the Silver Doctor's Weekly Metals and Markets Report story at that time debunking that idea. And it's the same thing here. I mean, China is going to set up its fix. It'll probably have it launched this year, and it's not going to change the world overnight, but it's part and parcel of everything I just talked about, how the volume, the number of contracts, the dollar value, the ounces physically that go into people's hands, all of that trade is going to shape the way precious metals moves in the future, and China's in the catbird seat. They're going to drive it. But it'll take time. It's not going to, overnight, instant presto end manipulation.
Yeah, and the longer it takes, Eric, the longer the gold and silver miners are in major trouble. I've been looking at a lot of the balance sheets of these gold and silver miners for paid consulting work for clients recently, although I've checked them in the past a lot too, but looking at them even more thoroughly. And if I could use an analogy for the gold and silver miners, I feel that the gold and silver miners are Wile E. Coyote chasing the Roadrunner, off a cliff and never catch them. And the Roadrunner is the paper metals gold and silver price. So it seems to me that every time the gold and silver miners, the paper metals price takes a dive since 2011, since it's dropped, the miners are always, reactionary, always trying to catch, always the Wile E. Coyote trying to catch the Roadrunner, and, they miss it. And then the Roadrunner just keeps on going, and the Coyote's always, at least a step behind and never able to actively catch the Roadrunner. And we see this in the fact that, the miners have cut costs. And if I could provide an example with that, I dug deep into Pan American Silver, and Pan American Silver now has an all-in sustaining cost of $14.50, which looks to be not that bad. But when you go through their financials, you see that of their 7 mines, primary silver mines that are running, that 3 of them are still losing enormous amounts of money, that are still operating at above all-in sustaining costs above the silver price. So, yeah, maybe their average cost is not that bad, but, I mean, this is a company that a couple years ago, their costs were, $25 an ounce all in on the silver when the silver price was way below $25 an ounce. And I don't want to single out Pan American Silver too much because this is a microcosm of the whole industry in general.
Yeah, and even though that we have more favorable costs primarily because of the decline in the price of petroleum, the damage has been done, and we're going to have a contraction in terms of the amount of ounces that come out of the ground this year vis-a-vis what's being consumed. We'll have a deficit this year, probably next year as well too. And if we don't have prices rebound, then we're setting up for the seeds of the next great bull market because of demand or supply destruction.
Yeah, exactly, Eric. And we have a market where demand for the physical metal is still strong, and it's increasing, especially in the developing world, and there's potential supply problems. We interviewed Nolan Watson earlier in the week, last week. I don't know if you listened to it, but he finances a lot of the junior miners, and he looks at almost all the feasibility studies for primary gold and silver mines to look for gold deals, gold streaming, and gold royalty deals he can do. And he's went and spoken with management teams and visited a lot of properties. And what he was saying was that a lot of these management teams, just to survive and stave off bankruptcy, because they can't go raise capital right now, the real amount of capital they need, they've started to drastically high-grade their mines. So they're destroying the mining plans where, maybe there was a 10 or 15 or 20-year mining plan where they were going to mine a certain amount of ore at this margin, a certain amount of ore that wasn't as economic, and they've destroyed those mining plans just to survive. They've switched only to the best ore now just to have some cash flow to pay off some debt or hedges or stuff like that just to survive. So long-term, this is bad. If you look in their financials, they may have, net income or strong operating cash flow, but they're not replacing a lot of these miners, Eric, are not replacing any of their reserves. So these mines in the short term, miners may survive, but they're not replacing their reserves. And longer term, those mines are going to switch from what the mining plan said was a lower cost mine to a much higher cost mine in the future as well.
And that impacts total output as well in those cases. So in aggregate, and the industry is going to produce less metal.
Oh yeah. And I spoke also with Nolan, and he said that there's really not that many low-cost gold miners anymore.
Yeah.
So they have cash, they want to do deals, and almost all the gold mining projects available for investment, no one can make any money really below $1,100 an ounce. I mean, there's maybe a handful of companies here or there. These are massive deals, but Sandstorm is not a tiny company. This is a $300 million company with good cash flow. So a medium or small-sized gold miner, which makes up the majority of the mining industry, most of these projects, Eric, are not low-cost anymore. There's just so all the easy, low-hanging fruit with $1,000 an ounce gold or less, it's either in very geopolitically unstable areas where people are scared to invest, or it's just not available at all to make investments for the most part.
Mm-hmm.
This is going to end very painfully. Obviously, we're seeing some evidence at the retail level that we're seeing, bottlenecks and shortages and things like that at the retail level. Now, we haven't seen 1,000-ounce silver bars, the premiums on those spike yet, and we haven't seen shortages of those. But, I mean, this with the problems with the miners, as we see mines shut down and miners go bankrupt and things like that, we may start to see that in the future then. Okay, so we're going to the Scumbag of the Week nominees, and there's so many of them this week, Eric. It's a really funny week for us. We're going to have a lot of good ones. One of them is from the U.S. government itself. I think it was General Petraeus. He was talking about how we should get Al-Qaeda now to fight ISIS and ISIL. This is a, WTF moment for me. I mean, didn't we lose control of all the Al-Qaeda people that we trained, and then we trained ISIS or ISIL or whatever they are called now, and then we lost control of them, and now we're going to go back to Al-Qaeda again and get them to fight ISIS? This is just ridiculous and stupid on so many different levels.
Well, Al-Qaeda means the book or the base in Arabic, and it referred to the list of names that were in the original Mujahideen fighters in Afghanistan that Ronald Reagan and his team basically recruited and trained to go up against the Soviets in Afghanistan in 1979-80. And that would form the basis of Al-Qaeda. A lot of people tend to have their brains slapped upside the head, and they take it really hard when they come to understand that Al-Qaeda is actually partially a creation of the United States government with allies from Saudi Arabia and so forth. And this latest example is really no different. I mean, we had the ISIS roots come from the forces that were trained with Saudi Arabian help and the United States help, British Special Services. They trained in Jordan, they trained in Turkey, and these are the so-called moderates that the United States and NATO has been using in an attempt to overthrow the Assad government. And the whole objective of the United States foreign policy is to overthrow Assad no matter what, and if that takes arming and training terrorists, then so be it. And Petraeus was making that argument, saying that we have to go and find the quote-unquote moderate terrorists to go and do our dirty work and overthrow Assad. This isn't anything new either. I mean, we have pictures of John McCain going over to Libya and Syria and meeting with the al-Nusra Front, who is an offshoot of Al-Qaeda, and talking about strategies of how to go and overthrow Assad by attacking his army and basically fomenting a civil war in Syria. There's been over 200,000 civilian deaths since the start of the Civil War a few years back. I mean, Americans have really no idea how much damage has been done in their name, and it is blood that's on Americans' hands. Our foreign policy is what has fomented this Civil War, and in fact, this refugee crisis that's now hitting Europe. I mean, the headlines are so vacuous, they don't have the context for people to truly understand that when you bomb the hell out of a country and over 200,000 people die and 5 million, give or take, refugees in neighboring countries. There's 2 million Syrians in Lebanon alone, and if you think Israel is a small country, Lebanon is like 20% the size of Israel. I mean, it's astounding what, in the name of trying to bring democracy and freedom to the Syrians and in an effort to overthrow the Assad government, what our foreign policy is represented. I mean, it's a tragedy. And now, ultimately, we're arming terrorists, the 9/11 towers were supposedly brought down by Al-Qaeda, and now we're, arming Al-Qaeda and training Al-Qaeda and giving them money. I mean,
and weapons, yeah.
It's bizarre. I mean, it's like some Twilight Zone parallel universe that we live in.
And when we lose control of them again, and we almost surely will, we'll have to go spend even more money to go blow up the weapons that we just gave them.
Yeah. Well, the thing is that it's not a matter of losing control. People say, the United States policy around the world is insane. It's crazy. It doesn't make any sense. No, I'm sorry. It's doing exactly what it's designed to do. It's designed to foment enormous instability in target nations such that the nations can be more easily controlled, be that either directly by installing a new government after some quote-unquote regime change and a prequel to that being colored revolution, or whether it's just letting some, region sit and fester like what's going on in Libya right now. I mean, no one can control it, and therefore that's considered a win because no one's taking the interests of the United States and blocking us.
So divide and conquer then, like what the Roman Empire had, where,
Exactly.
they would often fund with money and weapons both sides of one of their satellite territories, and they would fight each other in a civil war and weaken each other, and then the Roman Empire would just come in with their army, right, and they would just demolish both sides and then take over a lot easier then.
Yeah, I mean, the Romans were actually more overt in many ways than what you see going around now. I mean, the United States has so many fields of operation at this point that it couldn't have a full-on war in as many countries as it's involved with because there's just not a capability of doing that from a logistics point of view. So instead of doing that, we have divide and conquer strategies replace it. That's how this empire is held together, is that the internal factions go at each other and the whole country overall is weakened thereafter.
Yep, and then once the puppets are put in place, they start buying U.S. Treasury debt, right, to stabilize the dollar, like what Japan and Europe have been doing to help the U.S. out there with currency swaps and other things like that. Do you think then also Syria then, the play that you said with the Assad regime, is that also to like a backdoor play to hurt Putin and Russia then? Well,
I mean, they're linked, but they're not very strongly linked because the main thing with Russia is that the Syrian government is cozy with them. They have a warm water port in the Mediterranean, and it's basically their lily pad into the Mediterranean and being able to extend some force projection by use of Syria as an ally. But it's not as central to Russia's military as, say, for example, maintaining their operations in Odessa and their naval port there, their warm water port is of critical importance. So, there's a lot of talk right now about how Russia has been escalating its presence in Syria, and to some extent there is evidence that they're increasing their material sales, weapons and so forth, and training. But this whole idea of Russia putting a large division or whatever on the ground in Syria is more propaganda than not. They've had an ongoing relationship with Syria for many, many years, the military contractor relationships and the relationship they had for their port. So the latest wave of stories whipping up the Russian bear coming into the Middle East, and that's just one more reason why we have to go and put boots on the ground. That basically is the propaganda meme that's being set up right now. And in fact, I do believe that the West is going to make an argument for even more direct military intervention within Syria in the weeks and months ahead, above and beyond what they've been doing with Turkey, because now Turkey basically occupies a small portion of Syria's northern territory. But bottom line is that it's not likely that Putin is going to put a very significant amount of military presence in Syria just because of that, likely raising a confrontation risk with the West. But at the same time, he's definitely keeping the weapons flow going and the trainers going there and helping out with those weapons that they sell.
Yeah, and in the meantime, Putin and now China are announcing that they keep on buying more physical gold every month. China just started the policy of announcing its physical gold purchases monthly. But I think it's funny, though, because we have election season, So all the candidates are going to be asked, what should we do about Putin? Because, he's the main enemy that we can blame a lot of our foreign policy problems on right now. And there's nothing better in the future than for another large war than if the economy continues to get bad to get people's mind off of that. So, in the past, war has always been used as a tool when the economy is bad to keep people's mind off how bad the politicians and central bankers and stuff like that have ruined the economy.
And let's face it, too, the West is scared to death of this alternative system that the Chinese and the Russians are spearheading in terms of, the currency swaps numbering over 30 for China with bilateral relations and the whole SWIFT and new development bank system and parallel systems to the Bretton Woods institutions are all such that the dollar reserve status is under fire and the trade transaction basis for the renminbi is exploding. So, all of this threat to the dollar reserve petrodollar establishment is underway, and that's all the more reason, and in fact one of the main reasons why the United States is so belligerent when it comes to trying to check the growth of the Silk Road and the presence of Russia, and to try to control the Asian landmass has always been a geostrategic goal and imperative for any power that seeks to dominate the world. And it just so happens that Russia and China being smack in the middle of that landmass and having such a natural affinity for their relationships as they go forward is going to be a pretty big problem for the United States.
Yeah, I agree. Now it's time for more further Scumbag of the Week nominees.
Yeah, very much.
We have the Malaysian Prime Minister who has stolen about $700 million of public funds. They're in his own personal accounts now. And because of that, a lot of the foreign investment, so private sector investment and other people who are good, honest, hardworking businessmen in that country, they're taking money out of the country in droves because they don't trust the system anymore. Malaysia is not the only country that's doing that. So we have Nigeria, that's happened for years with the oil money, how it's gone to the Caribbean and Switzerland from many of the Nigerian leaders. We've heard stories about that for a long time. And it's also happened in Venezuela where Hugo Chavez's daughter, after all the assets of the rich and stuff were transferred, some of it to the poor, and other stuff was stolen and given to Hugo Chavez's family. And now that Hugo Chavez is dead, his daughter, I believe, is the richest person in Venezuela. And you know what? She didn't create a business. She didn't build that. She didn't create new products or services for the Venezuelans. We have shortages everywhere, Eric. And that brings me to our next story about Venezuela, how now there is smuggling of powdered milk in Venezuela. So they're not smuggling cocaine or heroin or anything like that. We have an honest hardworking guys on the black market trying to bring in powdered milk for babies and things like that because there's shortages of normal food staples and beer and toilet paper and electricity and on and on and on. Last couple stories for Scumbag of the Week nominees. There's the major political prisoner in Venezuela. He was speaking out about opposition to government, and I think he's been sentenced for over 10 years. So that's just totally sad, unbelievable. I guess in the United States, we still take for granted that we can still speak out against the government because I've spoken with people who were in Soviet Union and obviously now in China and other countries, you have to be careful about that. They shut down their social media, they monitor and censor and things like that. So I guess we still do have some rights in the United States where at least we can, have this discussion and post this podcast. And for now, we're not worried about any retribution yet.
Well, let's qualify that. There's a lot of people who come under the gun figuratively and literally when it comes to political activism in the United States. And, we just don't have it systemically and in a frequency that makes people stand up and take notice. But, the people like the woman who ran True the Vote, tried to get a nonprofit status listing 501c3, and, it's a voter integrity watchdog organization. The IRS deemed them as being too, right-leaning in their politics and harassed the founder and did multiple audits of their books and, showed up at her doorstep and on, to the point where she was, giving testimony before Congress about abuses of the IRS and the IRS being used as a political weapon. These kind of things are happening all the time. They're anecdotal and they make headlines just for a day or two and they kind of fade away and most Americans are unaware of it. But, we have political oppression outright in the United States in forms and examples just like this. It's happening, and unfortunately it's going to happen a lot more frequently as time goes on if, in fact, we have a social system and a social compact that kind of falls apart on any kind of catalyst like a financial crash or whatever.
Yeah, exactly. So people aren't going to the gulag yet, and, they're not being sent to Guantanamo Bay yet. But, yeah, there are retributions, I guess, in the sense that, they're sending the IRS and other things after people. Mm-hmm. So, to a degree, it's not quite there yet where, we have Mao sending all the capitalists to, work camps or Lenin or Putin either, murdering people or sending entire families to the gulag and stuff like that and confiscating all the assets. But, it's being done in slower degrees, I guess.
And to give you a great example, I was talking to someone who's 19 years old who wanted to get involved in journalism, and I offered an internship and working on a blog, and she's all excited, but then a week later decided not to take it because she was afraid of actually impacting her career going forward because of covering stories that might be considered controversial and having people look up what she was writing about in politics on Facebook or whatever, and, she decided not to do that because she's afraid of the kind of backlash that can happen. These are the kind of things that people do when it comes to self-censorship all the time. I mean, avoiding conversations with relatives and friends that might be uncomfortable just because of their political views. I mean, how many people in our audience have done that? I certainly have. I mean, this kind of, I don't want to go there because it's politically incorrect in the eyes of most people, and therefore, you don't want to deal with their uncomfortable subject, and that kind of stuff happens all the time. That's the first stage of the kind of a political repression in a society, where we are self-censoring ourselves or choosing not to dive into a subject and learn about something like, for example, Syria. Most people in America don't realize that they literally are directly responsible for 200,000 plus people who have died in Syria because of a war that we've launched.
Yeah, there's not a lot of independent thought, and people are scared of having views that are different from, the mainstream and the normal because they didn't hear it on Fox News or CNN or MSNBC or the mainstream stuff. I mean, even in my own family, Eric, a lot of my family members are not very supportive of what Edward Snowden did. My own mom said, he was stupid to give up a $200,000 a year job and say all this stuff. And I tried to explain to her how heroic he was, willing to sacrifice, his personal financial gains to tell the American people what the government was doing. And, I was trying to compare that to Daniel Ellsberg, the Pentagon Papers, how, and I think Edward Snowden actually spoke to Daniel Ellsberg before he leaked the documents.
Right.
So, he spoke to journalists, so he didn't data dump everything immediately. He didn't get any spies killed. He gave it to responsible journalists, so he didn't just dump everything. But, I mean, there's just people, when things are so different than what they hear all the time on the mainstream news, the information wars, that it's so difficult for them to understand the difference. And to try to compare someone like Edward Snowden, my mom was around during Vietnam War and Pentagon Papers, and I brought it up, and she couldn't make the correlation between the two. And there's so many other people like that. Edward Snowden's a patriotic American. He doesn't want to destroy the government necessarily. He wants it reformed. And he tried to go right to his bosses about, transparency and reforming the NSA and things like that what they were doing was illegal. And, he was told not to bring it up. So I see him as a whistleblower, but many Americans unfortunately don't.
Yeah.
My final story, Eric, for Scumbag of the Week nominees, and the nominees then would be the state of Maryland, which is known for being a nanny state, their county, and the Pikesville Middle School. This is just so sad. I mean, there's so many stories of this throughout growing up and adolescence. A Pikesville, Maryland 13-year-old will be charged with second-degree assault for kissing a 14-year-old girl on a dare. The assault, in quotes, happened at Pikesville Middle School on Friday. Police were called to the scene. So it's just amazing. I mean, this is the type of story where, a lot of violent crime is ignored. The cops are writing tickets for speeding and other violations and hiding behind bushes, and we have all these traffic cams and things like that. And now it's looking like there's going to be a lot of teenage boys who maybe kiss a girl on the cheek or something like that, and they're risking assault charges on their record. It's totally ludicrous.
And 13 and 14 is actually pretty old for kissing and
The girl was older. The girl was older than him, and normally aren't teenage girls bigger at that age than teenage boys? A lot of them, 13 and 14-year-olds.
I don't know. I mean, the first time I kissed a girl, I was 6 years old, so I must be really heading for the slammer.
Oh, you're lucky.
Statute of limitations, I'm safe.
They haven't changed. Yeah, statute of limitations. They haven't changed all the laws retroactively yet. They're not going to go back yet, but maybe in the future they will. Thought Crime from 1984 and Minority Report. I mean, this is just ridiculous. There that fits in there. I mean, and now with social media, right? You have proof. So if someone kisses someone and it's an assault charge, and these other states and school districts and stuff have this, I mean, kids can just take a camera photo of it and proof, and boom, everyone has an assault charge now. On their record. It's welcome to dystopia. It's just totally ridiculous. When I was a teenager, that was normal stuff there, like holding hands and stuff like that in middle school or things like that. Yeah. Okay, well, that wraps up the show for this week. So, in summary here, we have, the Fed's basically trapped. They may do a couple token interest rates in the near future, but they can't normalize interest rates because they'll start blowing up the asset markets and other collateral. So we may see an interest rate increase, but it really doesn't matter that much unless you're already short the stock market and other things in that sense. I mean, if you have cash and physical metal, physical gold and silver out of the system and Bitcoin and things like that, it's not going to really bother you all too much. And the other main story is the G20 not promising a currency war. I mean, we can't. That's totally ridiculous. These guys, they're Keynesians. When they have a hammer, they see everything else as a nail. They don't really know anything else to do other than devalue their currency to try to boost exports. Japan has kept trying to do this for years with Abenomics, and, they've been propping up the US dollar and the US Treasury market. And, eventually maybe the printing presses will be taken away from these countries, but this is all going to end in tears, either with really bad hyperinflation or, free market forces with deflation, or some combination of the two. The order's kind of tricky to tell which one comes first, depending upon which expert you talk to.
Yeah, I should probably also wish everybody a happy Shemitah week. Shemitah is the Sunday, and we're recording this on the 16th, so the world is still here. I mean, we had a volcano blow up the week before in Japan, so I guess, that adds some seasoning to this mix. But it's going to be nice to be recording this next time, 2 weeks or 3 weeks into the future, when we're looking in the rearview mirror and all of the hysteria that's been going on about the Shemitah cycle will be hopefully behind us. And obviously not that many people are going to be honest about what their calls were, but so be it. That's nothing new. This whole thing that has been framed by principally Jonathan Cahn in his book has been specious from the start. I mean, I don't know why it has become so popular in the alternative asset community in particular, but there's even the whole starting point and end point that he would use for his 7-year cycle was completely contrived. He has but one example, started framing the crash before the real estate crash as starting September 17th, 2001 as the end of the Shemitah year and the beginning of the next cycle, and thereafter, that big bear market. But the thing is that the stock market turned down in March of 2000, not September of 2001. So, you can look through this whole, frame of reference that Jonathan Cahn has injected into the consciousness and debate about the Shemitah cycle, and he is, in fact, the way in which in his framing of it is the way in which most people look at it. And there is no 7-year cycle per the dates that he picked. So I'm really surprised how far this has gone and how people have run with it. I mean, doom porn and titillation and stories like this do catch a lot of people's attention. And we'll see how things unfold. I have said since the fourth quarter of last year that it really does look like 2016, not this year, is when basically things are going to set up for a really large crash. And the principal ingredient that we haven't had up until that point in which things will change has been the ability and willingness by the conventional financial participants in our market to truly believe that the Fed no longer has their back. The losing of confidence in central bankers and their ability to maintain all of these spinning plates in a juggling act remains to this day, and that's why we haven't crashed yet. I mean, people are really believing that the system is still going to hold together because we haven't gotten to that point where everybody loses confidence. So, shimitar, shmimitar, I don't think it's going to happen this month, and the market's already speaking to that. So at some point between now and our next show, hopefully people are going to start looking around and tuck their tail between their legs and recognize that, we didn't have the crash in September.
Well, I think, Eric, a lot of these types of books, the more provocative you say something, like Harry Dent came out with a book saying Dow 40,000 about 7 or 8 years ago, and, we never came even close. And we never hear almost anyone talk about his ridiculous prediction like that. And then, he's on his next book now with the deflationary one, he's saying, the Dow's going below, I think, 600, below the 666 levels, or the S&P is going below the 666 levels, and, we're going to have $4 silver, and we're going to have $10 oil, and all these other things. So, I mean, it's provocative to say these things and sell books. You make a lot of money. You can make millions of dollars in a year to selling books like these. People will read them. And like the alternative community, I guess, maybe some people are rooting for a collapse of society or the economy and things like that. I mean, obviously the status quo, I hate it, but in a collapsed environment, Eric, there's going to be anarchy, really bad anarchy,
people are
violence.
Die.
Yeah. If things get I'm not really rooting for a full total anarchy where, everyone has to have a gun walking around carrying it and, armed security guards just to go to the grocery store and things like that. I don't want to live in a society like Argentina where right now, and I listened to Kerry Lutz's podcast, who was a previous guest on Welcome to Dystopia the last couple episodes, and, he got robbed in Argentina, in broad daylight, him and his girlfriend, they stole their passports and money and stuff, and he was stuck in Argentina on Labor Day in the U.S., and he had to go to the embassy to get a replacement passport and, deal with the cops there and other ridiculous stuff. I think people, who are rooting for a collapse, maybe they think their gold and silver price will go up and become more worth it. It's insurance. And if you live in an Argentina type environment, I mean, it's a bad place to live. Like, ask the people in Argentina if they want to live there.
Yeah. I mean, the only argument that has any merit that people make in this context is that, well, as things go on, the problems get worse, and the ultimate pain is going to be greater as a result. So there is something to be said in defense of people who say, bring it on, just get the crash over with, and that way maybe we'll have a reformation afterwards sooner rather than later, and that the total pain that people experience will be less. But, I mean, no matter how one looks at this, the situation sucks. There's no way out other than pain, and that's a question of whether it's more pain later or whether we go through very, very, very painful times now in the shorter term.
Exactly, and I'd like to, avoid mass amounts of violence, although, I do protect the Second Amendment right, and people have the right to bear arms. There's millions of responsible Americans who don't go on shooting rampages and, just own a gun and go to the shooting range and things like that. But I don't think any of those people who own guns, or most of them don't, I think most of those people do not want to be in an environment where they could be out at the grocery store or movie theater running their errands, and there could be, shootouts like in Cowboys or armed robberies all the time and things like that. I don't think anyone wants to live in an environment like that. But, I mean, there's so many books out there. Al Gore, I think, with his global warming, he was predicting in his book that, I think the sea levels were going to rise 20 or 30 feet by now. And, certain Miami could have been underwater. He said things like that. And, there's other books in the past, like Paul Ehrlich. I think he said he used to go on the Johnny Carson show, and he said that, there was going to be all these people dying in the 1960s or 70s.
The Population Bomb, published in 1971.
Yep. And he said then he was making, pretty outrageous predictions, and I think almost none of them have come true. With the sea levels rising 50 feet and flooding entire major cities, and tens of millions of people all dying at once, and things like that. So I mean, we in hindsight we've seen that a lot of these predictions from these people have not become true. That doesn't mean they won't ever become true, but they're low probability events. But that doesn't. People should still have some type of preparation for insurance, and then hope that you don't have to maybe spend all your gold and silver, that you just bought it prudently, maybe a little bit every month, for insurance and wealth preservation for outside of the system.
Yeah, and outside of the system being the most important part. There's no counterparty risk associated with holding your gold other than, excise profit taxes or other kind of possible frictions that come in terms of when you would want to liquidate your gold. But there's never been a more important time to have that kind of insurance right now. I mean, the financial system is rotting internally, and bail-ins are the rule of the day. And that's on sale. Asian demand has been off the charts. I mean, in India alone, we had in August importing 1,400 tons of silver and 126 tons of gold just in August alone. And back in the beginning of the year, it was expected that India would probably import maybe 7,000 metric tons of silver, but at this stage, they're on an annualized run rate of 10,000 tons. So it's off the charts how much precious metals demand is coming out of India and China and not really being reported in the West.
Yeah, and they bought even more silver than that. I think they bought 6,000 tons of silver in the last 12 months. I think they bought more than 20% of the physical silver market has been imported into India. It's a massive number, Eric, and yet the paper price goes down. Yeah. This is it makes no sense at all. Welcome to Dystopia, right? Who is John Galt? Welcome to Dystopia. I don't know what else to say about that other than that, so I guess we'll just end the show there. But thank you guys for listening. This is episode number 8. We have 7 other great episodes of Welcome to Dystopia. Thank you for listening.